Greetings from the set of Metro and More at Metropolitan Community College, serving more than 50,000 students with over 120 programs at our 8 locations in the daytime, evening, weekends, or online. Hi everybody, I'm your host Kent Pavelka. Welcome again to Metro and More. More of what you need to know about Metropolitan Community College. In this segment, financial literacy is our topic, what our parents should have taught us. And my guest is Larry Buland, who is a business and finance instructor at Metropolitan Community College and a good friend from many years ago and to this date. So it's good to have you on the set. I did not know when I found out that we were going to do this show that you're a full-time faculty member now here at Metropolitan Community College.
I am. I have been a businessman in Omaha, and I have been an adjunct professor at UNO. But I applied to Metropolitan Community College just within about the last 8 months or so and went through an entertaining process, and I'm just so happy to be here with this crew.
You know, we were chatting before we went on the air and exchanging some emails, and I said, how did this happen? And you said that this kind of was always in your wheelhouse. It's something that you had the aptitude and interest in, right?
Yes, my mother was a Millard Public School teacher. And throughout my education, all the tests, you take personality tests and recommendations and things. Being a teacher was always in there. And I do like to teach, and I like to share. And so I was happy when this opportunity came. And I tried it as an adjunct first to see if it liked me and if I liked it. And there seemed to be a favorable response from the students, which is the goal. And so here I am. This is my full-time focus now. While I have some other interests on the side, just for business, this is my full-time interest.
Yeah, and just for purposes of so folks understand, you mentioned your business. You have done business mainly, your own business in construction, correct?
That's right. Yeah. We owned a large construction company, still do in Omaha, and the Buland Group. But I've remodeled it really so that I can just maybe consult with people, help them with their projects, residential and commercial, keep the price down, keep my time down, and again, focus on education.
Okay, financial literacy, things our parents should have taught us. The class is Finance 1000, is that?
Yeah, Finance 1000.
Yeah.
And
you teach it at almost every campus, correct?
Yeah, since I've even only been here for 2 quarters, I have taught this class at 3 campuses, Fort Omaha, Elkhorn, and South Omaha campus. I've also taught it online, and I teach it in one of the prisons. And it's also being taught at the Sarpy campus.
Is this a class that was offered prior to you coming to Metropolitan Community College?
It was. It's only, though, about 24 months old. And this is really the brainchild of a number of people, in large part the Dean of the Business College, Daryl Hansen. But he pulled together, we have PhDs that are instructors here, we have certified public accountants that are instructors here. He pulled together people from the trades that teach the trades, that know what their students need to function in life. And this group of people came up with what really would be useful to the students. And this is the result.
Yeah, I mean, when I saw some of the things that we wanted to talk about and that you cover in the class, I thought, man, this is stuff that people ought to know before college, but we'll get into that. Just let's get started with a definition. What is financial literacy?
Well, if we just look at the words financial literacy, literacy means to learn how to read and write or read and understand something, or to become even an expert at something. And so we're trying to teach the ability to understand and apply smart financial practices in your own life.
It takes in a lot of territory, Larry. What do you cover then in the class?
Well, you're right, a lot of territory. So, just think about everything you do and every time you get your wallet out in the course of a month and all the things you want to do in the future with your money, and we cover that. So we cover career planning and selection for making and earning a living. We cover budgeting, or what the dean would like to call a spending plan. We cover the use of credit cards, credit scores. What is a credit score? How to improve a credit score? We look at saving, and we actually separate saving and investing. So we do look at investing and risks, and we look at retirement planning.
You do this all in 1 quarter?
Yes.
So this is at one level. I mean, there's one class in this.
This is one class, and while you could specialize in any one of these, and there are classes that do, right, on investing and other things, we do week by week, and students take something every week that they can begin applying in their own life.
What in your brief tenure here, and at UNO as an adjunct, in your experience, what is the biggest problem that most people have in terms of financial illiteracy?
Well, I think it is exactly that, the illiteracy. I think it's the lack of knowledge. So they know some things, or they know about something, but they don't know how to do something or how to not do something. They're not really sure why they're in trouble. And it's that knowledge specifically that we want to bring to them, but more than that, they don't have the tools, so we bring the tools. What could you go home today and do that would help you?
So do you find that that's the motivation a lot of people have when they take the class because they've got an issue personally, or are they just trying to educate themselves, or what?
Well, we get both categories, and so this class actually counts as the math component for some of the degree and certificates that people have where heavy math might not be required. So if you're going to go into some of the trades, for example, or some of the human services, this might be the math component that you're required to get. Others, though, come because they do want to improve their life. They want to first pay their bills, and maybe do more than pay their bills. And so I have actually had people in class from ages 18 to 64, as far as I know. I don't ask, but I know from 18 to 64. So you can see that they all are different places in their life.
But do people come in and identify what maybe their issues are so that you can help them in that respect?
They do, and they do it in a couple of ways. These classes become almost like families. People share what could be embarrassing in other settings. You know, I can't pay my rent, I'm upside down on my credit card, I'm upside down on my car loan, and how can I help? And they tell people what their credit scores are, and we help them how they can fix it. People in the class offer suggestions or similar stories that kind of encourage them and give them some hope and maybe give them some tools. And we have others that say, this is what I would like to do in the future. How could I get there? One gentleman last quarter wanted to buy a rental home with his father. What could we do? What are some things? How do we go about that? You know, it's a little bit off, but we try and answer all those questions.
That's good.
Yeah.
So you cover everything that you talked about, but you also get around to addressing people's specific interests.
We do, and so because I know as a student, and I'm actually taking 2 courses this summer myself, as a student, I want to take what I'm learning and then apply it to my life.
Sure.
And so sometimes making that connection, which they might not have done when they were younger, is what we really can accomplish in this class.
Why do you think it is that so many people get to this stage of life and don't have these tools already? Why, for example, why haven't our parents covered this? Or my question is, why is this not a K through 12 exercise? I mean, it seems to me to be a no-brainer that somewhere along the line in high school or middle school, let's balance a checkbook. Let's do some basics here.
Well, I agree with you, and. I remember in school we learned to count sometimes with coins and making change and so forth, and sometimes there's a gap from kindergarten, till graduation. And the schools may be doing that, I don't know. I do know from my students, that what I can learn is from my students. And I've learned that if it was being taught in schools, they didn't get it. And if it was being taught by their parents, they didn't get it. A number of them, when they share their experiences in class, I find that maybe their parents really didn't have those skills. And so they're repeating, we repeat good and bad things that our parents do often. And so they're repeating the mistakes that their parents made. And they are often free to, feel free to even say that in class. My parents had this problem and I don't know how to do it differently.
Let's begin at the beginning. Where would be a good place to start if you want to begin learning about finances?
Well, I have sort of 2 answers. The general one, start anywhere you can. And so for example, start where you are. So if you're looking to buy a house, learn about saving for a down payment, learn about house interest and so forth. If you're having trouble with a credit card, learn about credit cards. But where we start in the course is there's 2 sides to the equation, what we bring in and what goes out. And so we focus on first what we bring in, and especially for the younger students, but really students of any age, how can you earn a living? How can you make money? And we actually research some careers. How much do they pay? If that's a career you're interested in or you think that's what you'd like to pursue, what does it take to get there? Does it take a degree, a certificate? What kind of degree? What kind of training would you need? And then what kind of money could you expect to make? So that's where we start, is how to bring the money in.
Mm-hmm. And then go directly to dealing with how much goes out and how to deal with that?
And that's really the bulk of the time.
Yeah.
And we split that in 2 categories. How much goes out to other people and how much goes to yourself. And it's kind of a mantra There's two or three things that I want all my students to always be able to answer clearly when they leave the class. And one of them is, what bill do you pay first? And the answer is, well, I should have come to class. No, the answer is, you pay yourself first. Put something
For
in
savings, sure.
Exactly. And most are not doing that. And that little step can begin to change your life.
So what beyond pay yourself first do you cover in terms of that part of the equation?
Well, then we look at where the rest of the money goes. And there are certain priorities. We have to have food, clothing, and shelter. And we talk about shopping and making wise decisions. So for example, do you need a new car? Well, that's not what you really need. What you really need is transportation. You need to get to work. Are there other solutions that are more affordable to you than a new car in your situation, perhaps? And so an example is, could you live near work and walk or bike? Could you carpool? Could you take a bus? Let's talk about used cars. What level of used car? How to finance a car. So that would be an example of how we go about those other expenses.
So that's the beginning part of the class?
That kind of is.
Yeah, so then what do you do?
Well, then we talk more about credit is a big part of the class. The use of credit cards, the misuse of credit cards.
What do you tell them about that?
Well, I'm a proponent. It's kind of like there are things people can handle, things they can't handle. If credit cards will always bring you down, if you're in a place in your life you can't control your spending, then try and operate primarily with cash and a checking account. But
or use the credit card but pay it off every month.
Well, see, that's where we go. So my preference is, after taking the class, learning some skills, that you do have a credit card, because they can be so helpful. It can allow you to buy things that you might need when you don't have the cash this week, but you will next week. By the end of the month, like you said, we can pay it off. Mm-hmm. We talked to them a lot about the interest involved. And we talked to them about, occasionally, and we have a lot of successful people that come to Metropolitan Community College that can afford things. So now it's about managing it because they're losing some money. So maybe they can use their credit card and get points or airline miles and things like that, some perks. Also, it's really a great protection, although there's some risks for scams and things that take place. It's a great protection to have credit card receipts, credit card records. If someone were to steal it, you have a very limited exposure, maybe just $50 is all you'd be liable for. So there's a lot of benefits to having a credit card, but your point about paying the bill each month is really critical. We spend time, and I have an example, but we spend time on what would happen if you only pay the minimum every month. And it's a horror story. It's scary. And
because you show them how long it'll take to pay it off. Well, you never pay it off if you pay the minimum, do you?
Well, you can. And so I actually ran an example this morning. And if you owed $3,000 and never charged again, depending on your card, for maybe 19% interest, and only paid the minimum, maybe about 2.5%, it would take you over 18 years to pay that card off.
And how much would you have paid?
Over $7,000 for your $3,000 in charges. Plus, still 10 years from now, you're paying for something that you bought today, and you might not be as thrilled about it 10 years from now.
What do you tell people who come in upside down terribly? I mean, are they looking for advice as to how to resolve the issue?
We don't get a lot of upside down. We get some that may have an item upside down, a car, for example, or a house. And really, it's kind of like that old saying, if you find yourself in a hole, stop digging. So that's the first thing. Stop spending money. And then we start looking about, what do you have? Like, do you have a car you could sell and buy a cheaper car? And could you take that cash and pay off that credit card, for example? It's kind of practical things, but when it's our problem, it's right here and it's this big.
Right.
And so having someone else that's calmer and personally interested, talk to them and make them realize it's not really the end of their life, that there is hope, that people can come out of it. And really, that's that hope that you get from the financial knowledge that's so helpful.
Okay, so that's the second big thing you talk about. Let's try to cover it all.
Okay, and I'm not sure I have them all in order,
That's okay.
but we'll cover the topics that we cover.
What would be another one, a major thing that you emphasize?
You'd made a comment earlier. You asked a pretty insightful question. Do people even use checkbooks anymore? So the answer is, in a couple classes, no. Now, I don't carry a checkbook personally. I have to sometimes go home and get a check for something, but still, people use their debit cards, and that comes out of a checking account. And there are a number of people, especially the younger folks, that don't have a checking account. And so we talk about establishing a checking account.
What do they do?
they're cash people.
Yeah.
They're cash people. And so there's a world of people that actually, this is a little side point, but some things I've had to address in this and other classes, in business classes, people come to me and I had a couple of gals last spring that said, well, you know, our boss where we work, he pays us in cash. And we had to talk about that. So there's a cash world out there that's functioning. And it's not really an area that allows people to grow or have any security in. And
Then
so
you
we
get
talk
into
about
tax implications.
yeah,
We could do a
there's
whole
illegal
show.
things that
Yeah.
go on, and so and some of those things actually get discussed in class. We keep that confidential, but when someone comes to the class and this is how they've been taught to live, and it's not really the right way, you know, I bring that up, and I don't pull any punches. I say, well, first, you know, you're breaking the law, they're breaking the law. Here's what you can do. You know, make your decision, but here's what you can do.
But anyway, you do encourage them to get a
We
checking
do,
account,
yeah, we do a comparison of a bank and a credit union. And we show that actually, although I do bank at banks, right now I'm looking at credit unions from my research. The car loans are cheaper at credit unions, the house loans are cheaper at credit unions, and they pay you more interest, although no one pays much interest today on CDs or savings accounts. And so we tell them how much, we list on the board, we look at different companies in town, how much money it takes to open. It usually takes $50 or $100 to open a checking account. And then we move on to, so we make that selection, and we move on to using an ATM card, avoiding ATM charges, avoiding overdraft charges. And then we talked about bank reconciliation. So every month.
Back to the checkbook.
Yep, so whether it's your ATM card or a checkbook, and then, or even we bring in credit card statements, that every month, this is your responsibility now, this is what we have to do. Every month, verify and adjust things.
Yeah. And the easiest way to do that, I believe, is every time you do a transaction, make the entry.
Well,
Because it makes the end of the month reconciliation much easier.
and that pays off. I mean, the skills that you're promoting are absolutely helpful. The difficulty is when they don't carry a checkbook and they're carrying their ATM card, or now they could hold their phone, like I can go to Whole
Right.
Foods with my phone and pay.
I can pay with my watch.
Well, you're always ahead of the curve. You're always ahead of the curve. And so I'll have you come to class someday
Yeah.
and demonstrate that for
Yeah.
us. So they don't have any way to record that, you know, like we would have done it. But the benefit is, as you know from your watch, you can go on any day, any time to check your balance.
Sure.
And those transactions now, we don't have to wait for a check to clear. When we make that purchase, it shows up. So it's very current. And because we never really remember what we thought we spent the way it shows up in the bank statement.
Reconciliation can be done online, in other words.
Yeah.
I'm just saying, as a backup, if you do it on your old-fashioned way, now you've got it both places.
And I think that's smart,
Yeah.
and we really encourage that. And we have people of all ages and preferences. You know, some are more savvy on the internet, some are less. So those are great suggestions.
Okay, what would be next? And not necessarily in order, but in
Right,
some
so
of the things you
we've
covered.
talked about how to get an income, and we talked about having a checking account. One of the topics that applies both to checking account, not checking, but a little bit, credit cards, we move into talking about buying a car and buying a home, and insuring a car and insuring a home. And so those are two kind of separate topics. We talk about the types of insurance. You know, we can become insurance poor, and very few people have heard. You know what that means. I know what that means, but many students don't know what it means to be insurance poor. And it means to buy way more insurance that you need because you're either afraid of everything or we're trying to protect everything. And pretty soon your monthly bills for your insurance premium are too high, you can't afford them.
You know, I've thought about that, though, and I agree. I totally agree. But if you don't want to save anything and your motivation is to leave it to your heirs, that's a way to have
Right.
something to give to your heirs.
And, having
You know?
life insurance, for example.
Yeah.
No, I agree with that. And we talk about who does need life insurance. And so if you're in the classroom and you're 23 years old and you're not married and your parents are financially secure, you know, do you need life insurance? You don't really need life insurance. You could take that money currently and invest it somewhere
Sure.
if you could pull it out. If you're looking at being married or having children, or you want to you could even buy it as a way to give to charities if you ever choose to. You could do all those things. And so we try and identify really what do you need.
So you can cover insurance.
Cover insurance, and then about buying a car, buying a house. You know, for example, one of the things that my wife and I did is, you know, when we were first married, we went out and got a house, and it was a 30-year loan. And then we've only actually had 2 homes in our 38 years. And the second time, though, we went out and we got a 15-year loan. And I ran a quick example this morning, and for a $160,000 loan on a house, 30 years, you'd spend at about, I think it was about 4% loan, you'd spend about $115,000 in interest. But if you do it on a 15-year loan, you'd spend only $53,000 in interest. So $60,000 of real money would stay with you if you get a 15-year loan instead of a 30. So that's the type of thing we show them.
Yeah, and the payments aren't that much more.
It was about $400 a month more, which could be a little bit of a stretch now, but as time goes on and hopefully your income goes up a little bit, it's not.
Sure.
But if you shop with that budget in the first place, not the house budget, but your payment budget.
Right.
And plus you have 15 years at the back end that you're not making any house payment, and then we encourage that money could go into savings and investments.
Sure. Yeah, you can look at that extra $400 as what you would have been saving.
Exactly.
Right?
Exactly, because it is your money.
What's next?
Well, we do talk about loans, bank loans, car loans. And we did actually share a philosophy of how to own a car without ever making a payment to a bank. And the short version is you buy used cars, and you buy pretty inexpensive, not out to impress used cars the first time around. Maybe you spend $3,000 or $4,000, and you only drive it for a year. But the key here is you make that car payment, say $450 or something, you make it to yourself. Put it in a separate account. In a year, you've got $5,000 now, plus whatever you had in your $3,000 or $4,000 car that you sell.
Now this is predicated on buying the car cash?
Buy the first car
Yeah,
cash.
yeah.
No, thank you. And then make a payment to yourself. That's the key. You have to be able to make the payment to yourself. But then in just a year, you can drive a nicer car, maybe a $6,000 car, and you could do that for a couple of years, and then you can buy maybe a $12,000 or $15,000 car, making these payments to yourself. And then you can maybe go for 5 years on a car that you paid $12,000 for. And now you can start buying cars that are $20,000 or $30,000 if you choose to, and never make a payment to a bank, never pay interest.
You know, a lot of this, in the bottom line ends up being to be successfully financially literate, you got to deny yourself some things now. And how does that resonate with people?
It resonates really well. You know, if I could share, in the fourth week, one of the key things we talk about, and this kind of hits on it, is we do exercises every week, story problem exercises, and then they go out and do their own research and apply it. So in our online class, we have discussions that take place still, and this is what one of the students wrote from the fourth week this summer. He said, "This week it had some really great information. I especially liked all the different savings and budgeting strategies. I definitely learned some useful tips that I will apply to my personal finances. Also, really liked taking a look," this is the answer to your question, "really look at all my expenses and determining what was a need and what was a want. It really shed some light on things I could change with my budget and my spending habits." So that denying yourself begins with that list, and it's one of our early exercises. I'm glad you brought that up.
Yeah. Gosh, we could go a million directions here. We've got about 5 minutes left. Do you get into the market at all?
We get into investing. We get into what types of investments carry what risks and how much they return. So we look at U.S. bonds that might just pay a small percentage, but they're very secure. CDs and savings don't pay much money. We try and move to something different. We talk about mutual funds and how you can balance them a little bit, and we talk about high-risk investments. You know, our students are surrounded by people that all have ideas where they should invest their money, and they only hear one thing, which is a high return, and the second, I told you the one thing that my students should remember several things, and the second thing that they should remember is if someone talks to you about high return, what is true? And they answer in unison, high risk. So we really sound that warning. We don't talk about specific stocks or make stock recommendations.
Very good. When all is said and done, what does a student take away from your class, do you think, that they didn't come in with?
Well, what we just read about that student is he goes away with real tools, activities, practices that they will literally do on their own, on their home, on their computer to improve and enhance their financial life and their future. Maybe better cars, more vacations, a nicer home, retirement, no bill collectors. So our goal is not to promote rich, but to promote spending less than you make and living a reasonably secure financial future. And it's having these actual tools and knowing where they're going. It's a roadmap, I think, plus the tools.
And the interaction you have with your students, you can tell that they're motivated to go out and do it?
Well, just like the one we read, yes. I get thank yous from students, hugs from students. They come in and they tell me during the course what they're already doing and how it's changing. And they go home and tell their parents sometimes, or they tell their children, or even their grandchildren.
if you don't take the class, which you should, what's the best way to become financially literate? You said, educate yourself on what your issues are. I guess start online maybe, huh?
Yeah, I think today's world, there's so much information online, and so there are still, bankers and accountants, especially if they're the ones you use, that are good resources. Online search will yield a number of sort of self-help gurus. Look for people who aren't affiliated with a private company and therefore don't have an ulterior motive in what they're trying to get you to understand, but they're actually teaching you. Some of the universities and colleges have information that's out there. I encourage people to not spend any money to get the information. Get the information for free. You don't have to buy this information.
Larry, what about folks who may have some of these basics down, but they want to learn more? Because this is a lifelong proposition. Nobody can claim they're as financially literate as they need to be, really, I don't think.
Yeah, really, a review of the basics, even of some of the older students I've had, has been helpful. And so I think the first thing to do is really ask yourself, I know what I know, or I know what I think I know, am I doing it? And a lot of people could have an intelligent conversation about it, but when they review their life, they're not doing it. So I suggest to them, start with
Take the class.
Take the class and use these tools. But start with 1 month of your life. Set a budget for August or September, whatever month it is. Track everything you spend, everything. And at the end of the month that you've selected, go back and compare the two. You'll find a discrepancy. And then adjust for the next month. And that will begin to open your eyes, as well as educating about interest and credit. There's a lot to be learned about credits and credit scores. That's a big thing.
We didn't talk about retirement. You do touch on that.
We do. We do talk about saving for it, how to save for it, where to save for it. And our goal, just to be helpful to people, that when we separate investing and savings is for the short term, maybe smaller return and very safe. Investing might have a little more risk. The goal for investing is to have a return higher than the inflation rate.
Mm-hmm. Yeah. Okay. We've got a minute left. Anything I've left out that you think is important to leave our viewers with?
No, I can tell by your life experience and your education, you've asked really the key questions to bring out things, and I really appreciate that. I would, last night, this is true, I was sitting on my couch last night and I got an email, and this is from one of this summer students. She says, I want to thank you for this semester. I really liked how the class was laid out. I think your class was very effective and not overbearing. Thank you for teaching something we will actually be needing in the real world.
Perfect. Larry, thanks much, and I'm glad you're doing what obviously you're enjoying this.
I really am.
Yeah.
I love the people.
Very good. Finance 1000, what our parents should have taught us, financial literacy. Larry Bulan, the instructor here at Metropolitan Community College. Thanks for being with us for Metro and More. Our goal is to better acquaint you with the mission, leadership, and the reach of the college. I'm Kent Pavelka for Metropolitan Community College. If you have comments or questions about the program, please email us at metrovision@mccneb.edu. Thanks for watching.
This has been a MetroVision production produced by Metropolitan Community College.